Here's what I know about Veritone stock. Sitting at about $4 and change after dropping 40% this month, even though it's still up 58% over the last year. So the question I keep getting is, does this pullback mean the run is over, or is this the setup before a bigger move? Because after looking through the numbers, I'm more curious than ever. I mean, some analysts think that this stock is a multi-bagger. I mean, they think that it could 5x over the next year. And even I think it's entirely possible. I mean, this is the company that's behind one of the first AI operating systems, and their software segment just grew 55% year over year to $22.8 million. And yet, net losses, they jumped to $26.9 million. And that's the part that many of us investors just gloss over. But then there's a signal in their data refinery rollout that I think retail investors are also totally missing. If I'm right, it could change how this company scales over the next 12 months. And that's why, in this video, you're going to be learning the real story as I see it behind Veritone's growth, the risks that retail investors need to understand, and what happens next. Now, if you're new to the channel, hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers to help retail investors like us make smarter, more confident decisions with our money. Veritone is the company behind one of the world's first AI operating systems. It was built with a clear mission to use artificial intelligence to make businesses and societies smarter. Now, at the center of what they do is a product called aiWARE. This is a powerful and flexible platform that brings together multiple AI technologies all into one ecosystem. So it combines generative AI, vision, speech, audio, and even biometric tools to give organizations the ability to create and customize intelligent workflows that fit their exact needs. And if aiWARE becomes the default operating layer for these AI tools, well, this is where the long-term value and multiple expansion can really show up for us shareholders. By the way, I wanted to give a quick shout out to our friends at Moomoo for sponsoring this video. I gotta say, I'm loving their AI assistant. I mean, it's kind of like ChatGPT, but it's connected with real-time market data, so you can get in-depth and pinpoint analysis. And if that's not enough, new and qualified users from the States can get up to $1,000 worth of NVIDIA stock and up to 8.1% APY for a limited time with their cash sweep program. Scan this QR code or check the link in the description to see why 27 million users trust Moomoo for their everyday trading needs. Now, most of Veritone's revenue today comes from their software products and services segment, which includes aiWARE, hiring solutions, and professional services that help organizations deploy and manage these tools. Their managed services segment contributes a smaller but consistent revenue stream through their digital media hub. Now, the Digital Media Hub is a cloud-based AI-powered media management platform that helps rights holders store, organize, and share their content securely with partners, news outlets, and even corporate clients. And then we've got Veritone's Data Refinery, or the VDR, which transforms raw data into AI-ready tokens ready to power cognitive and generative AI models. With this, clients can license enriched data, train their own AI models, or even deploy tokens into their own systems securely. So VDR cleans and structures messy data so companies can plug it straight into AI models instead of spending months doing grunt work, which saves, of course, time and money and speeds up real-world adoption. And as these products scale, you're not just looking at one-off projects, you're looking at recurring high-margin software revenue that the market usually rewards with very high valuations. So with that, let's have a look at how Veritone's stock has performing, because that's probably why you're here, right? Veritone stock recently closed at $4.30 with a market cap of around $395 million. The stock is down 40% over the last month. However, we can see year to date it's up 31%, and over the last 52 weeks it's still up about 58%. So with the stock price trending down over the last month, naturally investors are asking themselves why. And this question came up recently on my Discord channel because we love to talk about it. So let's take a peek under the hood, starting with Veritone's most recent quarterly financials. Because whenever you see a stock that's up big over 12 months, but down hard in 30 days, it usually means that the market is trying to reprice the story, and that's where opportunity or risk shows up for retail investors like us. Veritone's reported revenue for the third quarter was up 32% to $29.1 million. At the same time, the company's net losses increased by around 24% to $26.9 million, which translated to about 41 cents per share as a loss. That means the top line is growing fast, but the bottom line is still deep in the red. So this is still very much a growth story, not a value play, at least not for now. Now, part of this quarter's revenue is $22.8 million from software products and services, which is up 55% year over year, and it was driven mainly by the strong growth in the company's iDEMS and VDR initiatives. When we exclude Veritone Hire, this increased by over 200% compared to last year, just reflecting the accelerating demand for Veritone's AI-driven software solutions. Managed services also brought in $6.3 million for the quarter, but down 14% year over year. And management guided fourth quarter 2025 revenue to come in between $33.4 and $39.4 million, up from the $22.4 million in the same quarter last year. For the full year, revenue is expected to land between $109 and $115 million, and that would represent about 20% higher at the midpoint. Even better, the company expects to reach profitability in the second half of 2026. Management is basically telling us to expect solid double-digit revenue growth and a path to break even over the next 6 to 12 months. If they can hit those targets, man, that can be a big re-rating catalyst for the stock. Along with its third quarter press release, the company disclosed that it's making steps to manage debt, as you can see here, where management announced that it's going to be paying down 100% of its senior secured term debt and about half of their convertible notes. And even their CEO, Ryan Steelberg, actually mentioned this to me when I interviewed him just a couple of weeks ago. Then on November 13th, Veritone announced that it had fully retired its senior secured credit facility of $31.8 million and paid down about 50% of its $45.7 million in convertible notes, reducing total debt by roughly $77.5 million. This cuts their annual debt costs from $14 million to $800,000 and frees $15 million in restricted cash. The company also removed all related covenants and liens. For investors, this matters because cleaning up the balance sheet like this early in the game reduces interest expense and financial risk, giving Veritone more room to invest in growth rather than just servicing debt. And their CEO also remarked that the strengthened capital structure positions Veritone to meet rising demand for its AI solutions and support broader growth opportunities. So getting rid of these loans is kind of like taking off a heavy backpack while you're climbing a mountain. I mean, it makes the journey easier and lowers the chances of stumbling if the economy or if the AI market cools off. Veritone's also set to host the AI and Data Economy Investor Forum on December 1st. In this forum, Veritone executives are set to share their outlook on the future of AI and the data landscape, while explaining how the company plans to grow through its platform roadmap and market expansion strategy. Veritone's also going to be providing product demos. They're going to showcase their aiWARE and industry-specific solutions and insights from major commercial and public sector customers using Veritone's technology. Events like this are not just marketing. They're also used to shape the narrative for analysts and institutions, which can influence how the stock trades in the short term. Speaking of which, let's have a look at the other catalysts that'll drive Veritone's future growth. So we know that the media industry is rapidly digitizing, right? With growing demand for AI tools to management and monetize content. This is their model, right? Their bread and butter. And over the last couple of months alone, Veritone has made several deals with media companies, including ESPN, Newsmax, and even Guinness World Records. And at the center of these deals is their digital media hub. And this aims to make these clients' massive media libraries now fully searchable, accessible, and ready for global use. And these media companies are also tapping into Veritone's licensing expertise to find new ways to monetize their archives and expand their revenue, or at least the revenue opportunities. Look at it this way. Every time a media company can squeeze more revenue out of old content using AI, well, it just becomes easier for them to justify spending more on platforms like Veritone, which is very good for recurring revenue and long-term contracts. Veritone's also gaining traction in defense and law enforcement by delivering solutions that enhance investigative efficiency and operational effectiveness. The U.S. Air Force Office of Special Investigations recently awarded Veritone a sole source contract to deploy its aiWARE and iDEMS platforms. And the Riverside County Sheriff's Office, one of the largest in the country, also signed a multi-year agreement to use Veritone's Redact software in its daily operations. And if that's not all, this July, Veritone achieved an awardable status in the Department of Defense's Platform One marketplace. Now, this makes Veritone's products now immediately accessible to DoD buyers, streamlines procurement, and opens doors to a much broader base of federal clients. And for Veritone, these deals prove their AI is real and already embedded in workflows where transparency, speed, and trust matter. Once your software is wired into defense and law enforcement systems, it's not easily going to be swapped out. And that can translate into sticky, long-duration revenue streams that the market often undervalues at first. Also, on October 14th, the company announced a major contract win for its data refinery, or VDR, platform. VDR is now slated to be rolled out to leading hyperscalers, marking a major step towards large-scale deployment and a wider market adoption. And all of this is very big news and very strong for Veritone. But to stay transparent, here's what I know and what still remains unclear. The announcement didn't name the specific hyperscalers or the developers involved, and this is likely because of confidentiality requirements that often apply to early partnerships with large tech firms. What I do know is that Veritone's VDR pipeline and recent bookings have doubled to nearly $40 million compared to August 2025's estimates, just a few months ago. This provides far stronger demand than expected and gives the company some real momentum towards profitability. If hyperscalers are willing to test and roll out VDR at scale, it signals to me that Veritone is not just playing in the margins. It could become part of the plumbing of the broader AI and data economy. Of course, there are two sides to every pancake, so let's shift the focus to the challenges ahead, because every company has obstacles that can shape its future. And Veritone is not immune to these pressures, and understanding the risks is just as important as recognizing the opportunities. So from what I know right now, the biggest issue is profitability. The problem isn't new. Previous quarters have highlighted that even with increasing revenue, net income is still in the red. Market shifts and increasing competition also add to the challenge. If Veritone fails to get this under control, it could see its financial position come under even more strain. Also, Veritone's government contracts offer growth potential, but they come with uncertainty since public funding shifts with policy and budget changes, right? When budgets tighten, renewals can slow or projects might shrink, meaning these partnerships, while still valuable, still expose the company to unpredictable government spending cycles. Now, on that note, CEO Ryan Steelberg also mentioned in my last video that Veritone is not locked in or overly dependent in any specific vertical. And this is important because the upside is that they're diversified across many industries, but the downside is that they still have to prove that they can consistently turn that diversification into sustainable profit instead of just chasing growth at any cost. So, with all that, is Veritone's stock a buy at these levels? Well, consider that a consensus among 6 analysts rate Veritone a moderate buy with a high target price of $23. That suggests as much as 435% potential upside. The average score is 4.17 out of 5 and has gone down a touch from 3 months ago. Now, a move from $4 to $23 would be a serious re-rating. It's almost 6 times today's price. So the market clearly sees a very wide range of outcomes here, from big upside if Veritone executes to real downside if they miss their own timeline. My bull case for Veritone is the accelerating demand that they're already seeing for their AI platforms, stronger software revenue, and a cleaner balance sheet. Veritone's expanding software adoption across media, government, and defense signals that its platforms are gaining real traction. And the company's major debt reduction, well, this is great. It strengthens financial stability and gives them more room to scale up. With new contracts fueling momentum and profitability that's targeted for late 2026, Veritone is increasingly positioned as a long-term beneficiary of rising enterprise and public sector AI demand. And with analysts assigning a high target price of $23, in the next year, the stock could be 5 times as higher this time next year. But what do you think? Do you believe Veritone's expanding deals can help it hit profitability in 2026? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it'll help others find the video, it'll support the channel, and you won't miss out on my future deep dives. Well, that's it for me today. I wanted to thank you so much for watching, and I'll see you next time.